Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, December 14th, 5:26 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, still in a bear market rally, still fading. We can't get above the 200-day moving average. I should say we can't stay above the 200-day moving average, but we are holding the 21 on the NASDAQ 100 and on the S&P 500. See over here on the trend gauge, leaders neutral with a lean toward green short term, neutral with a lean toward green medium term. All five indexes still above their 50-day moving average, so uptrend there. Long term mixed bag. We'll, as usual, take a look at all the charts and you'll see where we stand. So what happened today? We opened basically flat and then trended higher all day right into 2 o'clock Eastern time. We opened basically right where we closed yesterday, 40.20, trended up to 40.53 right at 2 o'clock. Then Jay Powell uh, took center stage first with the Fed statement that resulted in a sell-off. We went sideways for a little while, and then he read his statement at 2:30 that resulted in another sell-off. And then a bounce, but the bounce failed. We rolled back over, a little bit of a move up into the close. During his entire speech, the downside bounced at the 21-day moving average. The upside rejected at the 200-day moving average on the S&P within a couple of dimes. So very clearly, we see what at least today, and it's consistent with what we've been seeing, support on the downside at the 21, resistance on the upside at the 200. We'll see what comes out the rest of the week. A little bit of a positive lean after hours to the futures. No guarantee how that plays out, though. Our G6 6 ETF composite, growth ETF composite, down 0.6%, S&P down 0.6, NASDAQ 100 down 0.7, Dow down 0.4, mid caps down 0.5, Russell 2000 small caps continue to lag, down 0.65. Global diversified 60/40 stock bond down 0.23%. In-house, we outperformed today. Our stocks did the job. GROTECTION down 0.09%. So we'll get to the tail of the tape and then charts of interest. But first, let's take a look at, from a high view, what we do at Revere. Let's go back to 2021, where we had a nice uptrend in the market. And you can see trending now. Growth stocks topped here, so it was a bifurcated market last year. Growth stocks topped in mid February. They had a bear market. They topped again in November, and then in January of 2022, three bear markets during that time period for growth stocks, while the indexes were still holding up just fine. So that's why we keep an index core exposure while we're trending higher. Uh, Ideally, when we're trending above the short-term 21-day, and that moving average is stacked above the medium-term 50-day, and that is stacked above the long-term 200-day, and they're all going higher, we'll be, as long as we possibly can comfortably be, for clients here. Let's go back to 2022 when we started to roll over the beginning of the year. We test the 21 and the 50s; those happen all the time. But if we start going lower and the slopes of the line start to roll over, this is when we start picking up our defensiveness. And then if we break the 200-day moving average, if you follow us, you know this chart. If you don't know me by now, you will never, ever, ever know me. This chart, the one I tuck underneath my pillow at night, it's the bear market chart. It's why we make uh, risk management, downside protection, our number one job here at Revere. Because when you control the down trends, the drawdowns, the sell-offs, when you keep them under control and you stay within uh, high single digits, low double digits of your equity curve, it's very easy to regain it. A 10% loss just means you need an 11% return to get back to even. On the other hand, If you had the beta of the S&P 500 and you lost 27.5% this year, you need 38% to get back to even. These highlighted markets are that can be devastating if you're approaching retirement. On average, these six lose 44.5%. You need 80% to get even. So this year, 27.5%. Now the big decision with the Fed is inflation seems to be at least tamed with some statements that I saw made and some stuff that I read today. At least it's more in line with on a year-over-year basis. If we continue these small, uh, these tiny 0.1%, 0.2% gains, we'll be back to where we need to be by mid next year. Then the question is the recession. How hard is it going to be? What companies are going to get hit? How will earnings be affected? And what multiple will the market put on those earnings to determine where the S&P 500 should trade? We will, as always, take our cues from the market. I talked about that 39.50 has kind of been the dividing line above and below all year when we get too extended one way or the other. 40.50 at $225 earnings per share is an 18 multiple on the S&P. That's still typically on the high side. So when the Q4 earnings start coming in January, we'll get a better idea of the reaction. And it's not the earnings themselves; it's the forward guidance and the reaction. Some companies will be completely resistant to the recession. Some will be devastated by it. But we pick stocks, so we can stay out of harm's way. And if you're interested in this approach, reach out to me. Email don@revereasset.com or my partner Dan Stewart, dan@revereasset.com, or phone 855 Real Wealth. That's 855-732 5932. So what happened today? Let's take a look at the 5-minute chart. It's pretty clear. Um, Here's the flat open trending higher to 40.54. Here's Jerome Powell's statement coming out. Little bit of sideways action while it gets debated. Another move down when he read his statement. Then he started talking, and he was a little bit dovish on some of the things that he was saying. He kept talking about price stability, kept talking about we've got to keep the rates. We're not going to be cutting them. We got to keep them there to keep inflation under control. We popped up to 40.34. What's 40.34? Irony of ironies, that's the 200-day moving average on the S&P 500. You can see it's been a huge area over the last 2 days, going above it and below it like a ping pong game. We closed below it, but we did hold the 21. This down here, 39.65, right around the 21. This 40.34, well, this is during the speech and his Q&A. 200-day moving average completely held the two of them. Then we sold off afterwards, a little bit of a bounce into the close. So mixed bag. As always, we'll need to see more cards come out of the deck, but you can see here holding the 21 below the 200. That's where we've been the last 3 days. That's where we spent the majority of the last 4 weeks, in fact, poking ahead a couple of our ahead above it for a couple days, below it for a couple days, but ending up right around 39.50, 4,000, 40.50. So we'll keep an eye going forward. If our stocks perform like they did today, we'll be just fine. If they start to underperform, we'll sell them. But a break below the 21, a rollover, and a break of the 50 looks like we'll have leg 4 down. As always, we're ready for anything. NASDAQ 100, really the same, but it did hold the 21-day moving average. And the highs of last week or a week and a half ago and the highs of yesterday around 297, that's upside resistance. Dow Jones Industrial Average, we even during all day today, basically, financials were weaker than the market. When we started selling off, we got out of our UDOW at break even. I know somebody's screaming right now at the screen saying, but it bounced at the 21-day moving average. I'm well aware of that. I don't like the 14% weighting of financials in the Dow, but it is offset by the higher healthcare weighting. So this may be something that we revisit As any pullback, I would expect the Dow to outperform. It's certainly been the leading index this year. Mid caps sitting right on the 21. Small caps couldn't stay above the 21, the weakest of the indexes. 4 weeks relative weakness now, but it did hold the 50-day moving average. So that's another benchmark to keep our eye on. Uh, all three, the big cap indexes, all have a hookup on their stochastic. Small and mid do not quite if you look close. Let's move on to the equal weight indexes, RSP for the S&P 500. Held the 21 above the 200, and the 21 is above the 200 here. So uh, like I say, it's outperformance. It's been right in line with the S&P, as you can tell by the RS line here. But the gains that it made going back 2 months when it really outperformed, and the FANG type stocks were getting beaten down, this is when it really started to outperform. EW equal weighted Nasdaq sitting right on the 200-day moving average above the 21, so that looks pretty good. How about the dollar? Down today. So here's what the dollar did. Trended lower. While it was trending lower, the market was trending higher. Big pop up on the dollar on Jerome as the market sold off, another leg up, and then just the reversal, and basically started out right where it was when the 2 o'clock hour came around Eastern time. So much ado about nothing in the dollar. Dollar spiked higher, stock spiked down, but we didn't reclaim. The pivot was the FOMC at 2 o'clock was 40.50. We closed at 39.95. So keep an eye on 40.50, and 291 for the Nasdaq is where that was right at 2 o'clock before the information was released. So there's your dollar. How about the VIX? VIX oddly down today, along with the indexes being down. You can see it spike up when the market spiked lower, but this big sell-off afterwards, and didn't even get really near lows of the day. Take a look at it, back below the 21-day moving average, back to this 20 area. We consider 24 to 26 to be neutral, and we're below that, and that's good. That's good news for stocks if we're below there. VIX, what's up next? How about gold? Gold started out weak today, bounced at the 200-day moving average. Let's look at a 5-minute chart. You can see it dropped, but then recovered at 2 o'clock, and basically about where it was when the speech started. Silva, Hi-Ho Silva, up on the day, making higher close going all the way back to April. This is the leading metal. GDX, gold stocks, uh, undercut, but sitting right on their 200-day moving average, not ready to break out, consolidating nicely for about 2.5 weeks. How about bonds? Let's go to the broad index BND, which was about unchanged on the day. Okay, up 0.24%. BNDW, which is the year worldwide bond, was flat, but this continues to trend higher above the ADMA. Bonds in an uptrend. Stochastic has hooked back up, barely came off of overbought. 10-year 0 TNX inside day, basically flat on the day. That was as of 3 o'clock. Let's take a look at IEF, which is the 7 to 10 year, to see what that did after 3 o'clock. All right, trended higher. So price up, yield down. Let's go to TYX, the 30-year. Up on the day, pulled back after the yield. So the yield pulled back after Jerome, despite the fact that he indicated higher for longer. This means TLT up, yes, and into the close also. So let's take a look at TLT on a daily chart, riding the ADMA higher. Bitcoin, I'm not even going to do it. It was basically unchanged. Junk bonds pulled back, bounced off the ADMA, acting better than the S&P 500 as of late. So those are the key sectors to keep an eye on. Let's go to the tail of the tape now. Still sticking with the fading bear market, still sticking with the yellow bull case. We need to see some more strength, at least see how we close out the week. So 50 basis point raise What the market didn't like is that they raised the Fed funds target terminal rate next year to put it in print 5.1%. Prior to that, it was 4.6%. So that was kind of news to the market, and the narrative is that that's why we sold off today after that came out. Uh, Day count went from 2 days up to 1 day down. If you're looking for leaders, this is one of my notes. The 1213 high when we gapped up yesterday on CPI before selling off, you find something that is above yesterday's high, it's a clear leader. Pay attention to it. Expectations neutral due to FOMC coming into today, negative reversal at the 2 o'clock statement release. As far as the support resistance levels go, above but reversed at the 200-day moving average, below R1 4007, although we're back above it after hours. As far as the NASDAQ 100 goes, above R1, that 290 area, closed at 286. So we're basically right around this support resistance fib 286.82. Here's the action today, the reversal down to 39.65, higher, lower, higher. Excuse me. So sectors: solar strong, biotech strong, silver strong, transports, healthcare, and aerospace strong. Dollar down, 10 of 11 sectors down. Semiconductors weak. SIC, that's the silicon carbide stocks, four of them that we track. ON, AEHR, Wolf, and STM, all lower on the day. Uh, Sectors that were down, but just barely down, so showing relative strength. That's why they're in yellow: industrials, staples, and utilities. So here's the focus list. We'll take a look at these charts momentarily. Early in the day, Steel Dynamics was pulling back. It lagged all day. When it bounced, when it got to the 8 and got to the pulled back down to the +3 R for it, that's when we sold our last piece of it. So we're out of Steel Dynamics. UDOW, I talked about how we sold that when we broke down today. Trimmed half of our SDS. This was when we came down and bounced at the 21-day moving average. We took half of the SDS down as we showed support. So we still have half of it left. Bottom line, negative reversal on the FOMC statement. S&P and the NASDAQ 100, third day, they're above their 21E, but below the 200-day moving average. So those are the key levels that we need to focus on. Here are the support and resistance levels. Nothing's really changed there. So let's get to what we're holding, the focus stocks, and shed some light on what we did today. So here's the Steel Dynamics. Had some levels set when we started to undercut that 8. That was when we pulled back to the +3R level for us. We took our profit on that. That's a trade that worked out just great. So you've heard me talk. We keep a lot of stats. I write down what the S&P 500 was at every time I take a trade, and if they all worked out like this, I'd be retired. But they don't. And the point I'm trying to make is Steel Dynamics. So we bought it on 11, bought it in two tranches, 11.11 and 11.10. We booked this part with a 13.5% gain. During that same holding period, the S&P 500 was up 2.42%. So we try to do double the S&P when we buy anything. Very clearly accomplished that. So the buy on 11.10 back here, we added the next day. We already took profits at +2R the next day, rode it up, rode the ADMA higher, a little bit of a pullback here. Took our first profit on it. Let me scroll back and see STLD. It doesn't jump out at me, and I don't want to take up too much time doing this. All right, making for a bad video now, so I'm going to drop it. But anyway, we're out of Steel Dynamics. Still looks great, but sometimes you just got to lock your profits in. So next up, On the focus list, what we're holding, Boeing, fine on the day, finish positive. Anything positive on a day like today is fine. And again, look for anything on your watch list that is in the upper range or near the highs from Friday. Those are very clear leaders over the last 2 days when we had two inflection points. We had CPI and we had um, the Fed today. If your stocks are outperforming on these 2 days, pay close attention to them because they're leaders. Netflix still holding this down about in line with what the market is today. It's riding the 8 EMA higher. The video, we bought this yesterday. We're underwater on this, but it bounced at the 200-day moving average today. We sold Steel Dynamics PI, still holding this, not really going anywhere, but hanging around the 21. 5 FIVE did what it was supposed to do. Down a little bit today, but bounced at the ADMA and held the ADMA. Remember, I'm trying to apply those rules for earnings gaps that I talked about in the video early this week. And basically, if this is going to be a winner and the market's going to have to cooperate, it's going to have to hold that ADMA. Mobileye was up very strong today, gave a lot of it back toward the end of the day, but I mean, again, I wish they all acted like this one, just riding the ADMI higher, probably due for a sharp pullback. We're sitting at a pretty nice gain on this one. TMDX, the Thinster that we took 1% size on, held up very well the last 2 days above the ADMA. And FAS. So basically, FAS is we make money when the financials are weak. We survived the shakeout yesterday, back above the 21 today. Let's look at XLF because it's back below the 21, still above the 200-day moving average. And let's look at KBE because the banks are really what brought my attention to this one, making a lower low initially with this big sell-off, this change in character on the banks on 12.5. Bounced yesterday right into the 50-day moving average and the declining 21 and failed, and now making a lower low today. So basically, uh, this is the exact opposite of what we're looking for, uh, this action, which means that FAS is near the high. But honestly, it was outperforming. It took a little bit of a break for a couple days, and like I said, survived that shakeout. But that KBE, this is the exact opposite of what you're looking for. In this case, it's below the lows of yesterday. Um, so that's those are laggards, the direct opposite of leaders. The leaders would be above anything that is near the highs of Thursday. Okay, other things that we don't own, but we want to take an eye on. Not good action from Apple today, back below the 21 and the 50, but still holding that 140 area. Microsoft has been very clearly stronger, but can't get above the 200-day moving average. Nutanix, a new one. I've been watching it for a while, but it's been on the secondary list. This is what I'm talking about. Uh, 6 days up and 5 days up in a row here after this little flag. This is perfect. This is another EPS winner following the rules. Had a shakeout the following day as the market pulled back, then pull back right to the ADMA and heading higher. I'm pretty sure I already put this in my tracking list for good acting gaps. Yep, so don't own it, but any pullback looks buyable based on that action. mRNA, don't like the technology, can't argue with the price action. They said they've got an mRNA, a drug that tested very well for cancer. That's going to get the attention of the biotech community, up 19%, 20% yesterday on 430% volume. Broke out of the cup and handle, made a higher high today. Monster volume today, almost as much as the inflection point day. This means that overnight, the analysts took a look at it, decided it was for real, and bought it today, even on a down day. So a very clear leader, mRNA. And finally, a stodgy old stock. Builders have been acting well. It's got some upgrades today. Home Depot holding up very well above the ADMA. And let's take a look at a couple of sectors related to that. XHB broke out, failed, bounced at the 8 today. ITB broke out yesterday, held the 8 today. Lennar, I think, got an upgrade today. They reported after hours, I think. Let's see if I can get a quote on that after hours. Can't get a quote. They don't do their earnings call until tomorrow morning. So Lennar acting well. Let's take a look at TOL before I completely lock up Market Smith. Very similar action, and DHI, very similar action. So building and building related stocks acting pretty well. That's going to wrap it. That's the focus list and a couple more. As always, like your feedback, Don at revereasset.com. Phone 855 Real Wealth. That's 855 732 5932. So remember, it's not how much you make in the market, it's how much you can keep. Keep risk control as your first priority, and the gains will come when the market gets back to a healthy posture. We've gone over all the rules, there's not a lot of them. We detail them every night here. The important one is the 200-day moving average, and if we get back above that, we can put that in the rearview mirror and focus on making money instead of preserving money. So, wrapping up Wednesday, FOMC day, two of the most volatile, stressful days I can recall in a while. Wrapping it up, Wednesday, 12/14. This is Don Vandenbord, telling it like it is. Thanks for listening and have a great day.